Hello everybody and welcome to Green Star Trading with me, Tom. All views, opinions and ideas expressed in this video are my own and do not constitute financial or trading advice in any way. Right, we're back in business. I only got a video, I think one video out last week on YouTube, and then I promptly lost my voice completely and wasn't even able to do my live stream for my patrons, so I'm looking forward to being able to do that this week. And hopefully we'll get 3 videos out on YouTube. I seem to have recovered now, so we're going to crack on. We're going to be looking at the SPY today. We're going to be looking at the NDQ. Going to have a quick look at the VIX and the PCC and just do a quick roundup of the markets as usual. So before we get into the Elliott wave count, I just want to start with some basic analysis first, okay? So a quick recap. We spoke several weeks ago. Let's just turn the counts off for a moment. We spoke several weeks ago about why we were still, or while we were still above the trend, we had no reason to suspect anything other than the continuation of the bullish march higher. But as I pointed out several occasions, we should always be keeping an eye on this, because once trend breaks, we have to reassess. And that's exactly what we did, and we spoke about the bearish accounts we have coming down here. And for the meantime, I am now definitely leaning that way. How severe this is going to get, there are several options we'll look into, but we'll start here looking at some basics first. So depending on however you draw this thing, whether you put the trend line there or whether you use a parallel channel, like so, or whether you use, a regression channel and run it up the whole thing since the March 2020 lows, we could do that as well, take in every little piece of price data we've got. You can see how we have broken trend and are heading lower. Right, so we're just going to keep that one, lock that in place for the moment. We can also use a pitchfork to show this as well, and I've covered this in several previous videos. This trend remained intact until it wasn't. Okay. Now, some other bearish things have shown up. Let's just bring up the RSI and the MACD here for a minute. And we're going to come out into the weekly time frame. Okay. Now, as you can see, on the weekly time frame, RSI, having reached overbought conditions and sustained it for quite a long period, has moved back through neutral territory, not oversold yet, so there's still room to come lower. We can see that the MACD has rolled over as well, back towards the zero bound, and has actually crossed through with the average through the zero bound now as well, with the signal following behind. So the first time below the zero bound into officially negative territory on the MACD on the weekly time frame since March 2020 lows. So negative also. If we come out to the monthly time frame, we have our first bearish crossover on the MACD here since the March 2020 lows. Now, as you can see, we've had these periods before, like during that crash. We had the period in 2018 into 19. We had this period back here through 14 into 16. And of course, we had the huge crash back in the GFC. So these monthly crossovers, they can be temporary periods of consolidation like this, or like this, or they can be something much more ominous like the great crash back in the GFC. And we've had that crossover now on the MACD. This is not, essentially not a bullish thing. Okay, so we also have on the monthly time frame, without reaching an oversold condition, which was the last great bear market back during the GFC, we have built up this pretty substantial bearish divergence here. Okay, it's not present on the MACD, but it is on the RSI. In the weekly RSI, we can see we're basically just putting in the same top over and over again. We don't have a clear divergence. More so we did here in the MACD, where we can see weakness starting to come in and starting to roll over. The day time frame also shows some pretty strong divergence between highs on the RSI, as we can see, which was this lead up here when we had this initial thrust down. So we got some pretty strong bearish divergence here. Now, we pointed this out a few weeks ago, but it has since, of course, materialized into something bigger. Now, if we look at the volume as well, we can see how we've had a pretty significant increase with this first thrust down, showing that, you know, this is unlike other periods. We have had corrective periods where volume has increased, right? That seems to have been the norm throughout all of these, throughout this whole bull market. Okay, we've had pretty, unimpressive and declining volume on the increases, and we've had some spikes on the more bearish periods. Okay, let's just make the chart a bit bigger so you can see it better. Sorry, I didn't appreciate just how small everything was there. So as you can see, we have these like bullish phases, and we have pretty low volume. Then we have some spikes where we sell off a bit. Then we have some pretty low volume as we can move up, and this seems to have been the pattern. Well, the recent breakdown has it hasn't broken the pattern, so to speak, but the bearish move here is stronger. There's absolutely no doubt about it. If we just cap off the top of all these previous moves, basically taking in as many highs as we can, let's push it right up to these ones here. You can see how the recent thrust down has been stronger. Okay, and supported by volume. It could be over, or we could have a lot further to go. I mean, that's up for debate. It depends how we interpret this high up here. I'm overall leaning more towards the bearish side at the moment, having seen this trend broken. And if we bring up our moving averages here as well, you can see that we are, still a little bit stuffed up. We can see here that we're still testing the 250. Okay, so this is like seriously strong support at the moment, and is very much getting in the way of making further progress downwards. But if it breaks and we start to fall here, then this could easily start to unravel as a very bearish move lower. So this could be 1-2 off of the low before we continue up, or this could be, a 1-2 down before we continue lower. We have some clear invalidation points to talk about, but essentially that's the situation at the moment. We've broken trend, we've come back to the 250 on the daily time frame, we've got volume increasing with the sell-off, and then we've got lowering volume of what is more likely a corrective counter trend move before continuing lower. So overall, everything's looking a bit bearish, to be absolutely honest with you. Okay, so let's start running through these various counts to explain this move down and what I think is going on here. So I'm going to start with what I would argue is my favourite at the moment, which is we've completed the primary wave 1 high, and we're now going to get a significant move lower. Okay, and then we'll look at some others as well, but I still have problems, and this is why there's several counts up in the air at the moment. Overall bearish, but it hasn't presented itself as cleanly as we would have liked. So let me show you what I mean. Let's come down to the 2 hour here for a minute, where we don't have, I do have a count to show you here though, but I'm just going to keep it naked for the moment before we consider how we've gotten down here. The point I want to emphasize is since the high up here, we can look at this whole topping structure in several ways. We can look at it as a completion here, and then a 3 wave move, and now we're done, and we're going 1, 2, and we're going higher. That's the bullish way of looking at it. If we're going to be bearish and look at it bearishly, and we've got that monthly cross on the MACD, we've got bearish signs that things are going to get worse before they necessarily get better. Now we could have bottomed, but bearish hat on for the moment. We didn't get 5 waves down. We got a zigzag. We got 5 waves in here into an A, B, and 5 waves in here into a C, and it's clearly 3 waves. Now you can try and force it if you want and say that you got a 1 and a 2, and then you got a 3 and a 4, and then this is now 5. But I think honestly, if we take that to one side for a minute, that's not a very attractive impulse wave. And if you take the wick into account here on the low of the 1, then we've overlapped anyway. I'm not going to get into that debate now whether or not we should ignore wicks or not, or whether we should account for them. Price territory is price territory, and we came in and violated it. That's the way I see it. So if you disagree, that's fine. It's just one of those arguments we can go back and forth on. I would argue structure is always more important, and I would argue that that is not a very appealing or sound Elliott wave structure for an impulse. Okay, I'm not saying it's impossible, I'm just saying I don't like it. So I'd rather see this for what I think it is, which is this is a single move down on its own. Let's not use that, let's use a regression channel instead. So this is a self-contained move here. This is broken out of it. So I don't think that this is part of this. Okay, I think this is a separate part of a larger move. So this, then that. Okay, that's how I prefer to look at it, and I think it's pretty clearly three waves. So from here, coming down from the high, then if this is a zigzag and we're expecting it to go lower, there's only one real way we're going to be able to do this, which is we're going to come down in another zigzag. So let's just look at that idea, and this is how I've interpreted it so far. Now, we get our ABC 535. We get an ABC here, another zigzag. We can take this as a diagonal, and that's why there's a bullish count that's possible as well. A diagonal into the A. If you're looking at the futures chart, you can count it the same way, or you can look at it slightly differently as a flat pattern in a B, or a flat pattern in a 2. Right, so let's not obsess over that at the minute. We get a three wave move here into our X. So we've got our W, our initial zigzag down, and this is not deep enough in the bearish condition where we've rolled over and we're going to have a multi-month correction. Therefore the first zigzag's not big enough, and therefore we can expect the second zigzag to be much more impressive, you know, and for there to be a slightly extended relationship between the initial W and the Y. Now it doesn't have to be anywhere near as extreme as I've got it down here. We could go 1 to 1. We'll look at the Fibonacci retracements in a bit to see what kind of targets we can look at, and also the extensions to see where they come to. But for the moment, we get a 1 and a 2, and it's as tight. It is a gnat's cock between these two highs, but it's just legit. But we get a 1 and a 2 down, and a 2 back up. It comes back to 99 point something %, but doesn't breach it. We could just move everything over here and say W, X, Y within an X. Okay, and we get a truncation. Now, if you prefer that, that's fine. It's another way of getting the swing into a slightly different position. But either way, this high or this high are so close to one another, that would be your invalidation point anyway. So if you come back up through here, alright, then, and we regain the previous trend, and we turn this around and become more bullish on the smaller time frame, then this is either a larger ABC, and this is ABC, and this is ABC, and then we're going to come down, right? Or this is 1 and this is 2, and now we're going to go higher in a 3. But they both have clear invalidation points. So 457.99, just, you know, move the decimal place one position to the right for the price of the SPX. Okay, so if this is correct, we're building an extension down into our next A wave of what's going to be an A, B and a C in a larger zigzag. And that's all I've got for you so far for this count. Okay, so before we move on, let's just take a couple of measurements. So maybe come out to the 4 hour so we can see. Put that back on. So we're going to run the fib from the low to the high. Set it to our wave 2. So 50%, 61.8%. I've moved, obviously this isn't going to unfold like this. I've just stuffed all the count down here so I can add to it as it develops. Okay, but working on the idea of 1 2 1 2 1618 1618 subwave, and then extrapolating it out from there, it could be a pretty impressive fall down from here. Now if we take the 1-to-1 relationship of W equals Y, or I should say, sorry, Y equals W, and we need to zoom in here to that, we can see that we don't get anywhere near as low down here. Even if we got a 1618 extension, we would be back down at 36197. So if this is a single double zigzag, this seems very stretched. But there's no reason why it has to be a single double zigzag either, is there? It could be a triple free, okay, rather than a double free, in which case we could easily come to target, get another move, then get another move, and this whole thing could continue to just be a giant zigzag pattern, but multiple zigzags until we unfold lower. Until we see this thing break down more, the specifics of how we're getting down here and whether or not it's a single or a double zigzag or a triple zigzag pattern, it's all up for debate. Okay, but we would expect the wave 2 to retrace somewhere between the 50 and the 61.8. Now, I will add a caveat to saying that we have seen multiple shallow wave 2s over the last 12-year bull market. I could go back, well, you can go back and look for yourself. They're all over the place. And it does seem to be ever since QE came into the market and constant central bank support that wave 2s do not tend to retrace to 50 to 61.8 we would expect. Instead, they can often settle around the 38.2 and be quite shallow. So even if this is a primary wave 1, it doesn't have to result in an extremely deep 2, but it could. So that's the best I got for you at the moment for this count. Invalidation wise, come back above 457.99. We'll look at the bullish count and take that back as the primary for the meantime. If we continue to break down from here and break this low, and we see an impulsive wave continue to break down, I'm going to assume this is correct, and we're coming down into an ABC again of what could be WXY, or it could be WXY, XZ, and 2 more zigzags to come. We won't know until we complete another impulse down here and into an A, then a corrective move, then another impulse, or diagonal into a C to get another ABC. Okay, so that's the WXY idea. Okay, so now let's look at the bullish idea. We don't need the primary wave top. We need the bullish alternate count here. Okay. So this is the most bullish interpretation I can pull out of this at the moment. We've shifted the channel to accommodate a wave 4 low, and therefore using Elliott's second method of taking the 2 and the 4 to the 3 to project the 5, right, which would be somewhere out in the future along this channel. So who knows where? Probably way out here, you know, out towards the end of the year. It could come a lot sooner, possibly. Let's just leave it somewhere in the middle. Either way, this idea assumes that the correction's already over. So let's zoom in and see how we can achieve that. Now, like I said earlier, the issue is we didn't get 5 down here. Now 5 is either the start of something or it's the end of something, and we started or ended with a 3. So that leaves only one kind of correction available to conclude the count here, and that's a combination. And in this case it would be a zigzag, which is not exactly nice to look at by any stretch of the imagination. A flat, where I think we can get a clearer 3, 3 and 5 in here, just zigzag, flat, zigzag, and we've gone W, X, Y, and we've bottomed here 421.28. So if we zoom in now to this noise, come down to the hourly time frame, getting off a low is absolute garbage. But I have to be honest with you, getting off of a low correctively, cleanly, or impulsively, motively, is absolute garbage either way. It's just a big choppy mess, and it all really does unravel both, you know, from both perspectives, because of the failure to get an impulse down here. That could have completed a flat for a C, or it could have completed a 1 for a bearish count, and we didn't get it, so it's just become a mess. And unfortunately that's just what happens sometimes. So we get a diagonal which is dodgy as hell but legal in the 1. We get an ABC here for the 2. Now you can pick out 5 here. 1, 2, that's a triangle. 3, 4, 5. Right, now bring that down to minuet. Then we get a dodgy as hell triangle, but it's the best we got. A, B, C, D, E. And then we have to squeeze an imaginary 1, 2. You can probably imagine it here. 3, 4, 5 into the 1. and it's a truncated fifth as well. So I don't think I could make this messier or more ugly, but like I said, whether you want to get that truncation here correctively or whether you want to get this as a 1 down and a 2 back up, it stinks both ways. Just does. And then we get a zigzag down, which doesn't look done yet. If I had to be absolutely honest, I would probably pick it out as 1, 2, 3, 4, 5 for the A, and then I would look at this as 1, 2, 3, 4, and a bit more down back to the edge of the channel here to go a little lower to find a 1, 2, extremely deep, but still legal. What are we talking? Let's drag it back to the start. We're at the 707 at the moment. 78.6 below is 89 below that. So we've already come through the golden ratio and we've broken it, which is pretty bearish, and therefore signalling that we're likely going to go lower in this correction. So that's the best way I can get down, up and back down in a 1 and a 2. Now the invalidation point for this is here at 421.28. So it's the same low. It says, it reads here on the side 421.34. It's the placement of the little price tag here isn't perfect, but it's this low. It's either 421, alright? Break that, and this bullish count is invalid. Break these highs, as I pointed out, with the price tag on the bearish interpretation, and we're bullish. We're not going to know clearly either way until we see what comes out of here. So breaking down's easy. There you go, bullish invalidation done. If we come out of here in 5 and we extend, right, then we're looking at potentially a wave 3 unfolding. Right, and if, I mean, by that point you've made new highs, it's strong as hell, and we'll see if we come out of here in a smaller 5 waves first into another 1, back into a 2. Okay, what happens here is going to help determine whether we break these highs or this low, but for the moment in this range we're not decided either way. A break above here will potentially look more bullish, a break below here will continue the bearish pattern lower into that bigger zigzag. Alright, so that's the bullish count as I see it, and it's the best I can do. Getting off of that low is ugly, getting down to it's ugly as well, so it's just that. Technical analysis, the basic technical analysis at the moment is all working really more in favour of the bears than it is at the bulls. I'll just say that. We need some clarity to come here in the Elliott wave count. Okay, so let's come over now and have a look at the Nasdaq then. Right, so are we on 1 hour? I'll stay on this for the moment. This is the same idea as the SPY, slightly different, presented slightly differently, and I think I'm going to have to abandon this interpretation, and I'll explain why in a minute. Primary wave 1 top I can agree with, that we've come up here in a big primary wave 1, we're going to get a big pullback now, giving up 50 plus 60 plus % of the prior move up to this high. Alright. At the start of this correction, things seemed clearer. We had a diagonal down, ABC2 back up, which didn't make a higher high like it did in the SPY. And that higher high causes all sorts of headaches. Okay? Because it's conflicting with our classical analysis, which is telling us to be more bearish leaning, and our Elliott wave analysis, which is telling us that we may have completed a correction. So let me explain the issue here. Getting down in a motive, that's fine. A, B, C into a 2 to a lower high, that's fine. Deep 2, no doubt, but still legit. This is a flat. 3, 3, 5. Now we want 5 in here, but it doesn't exist. Not without force fitting it. Alright, so we've either got the issue of having to say something horrid like 1, I'm not even sure how you do it, 1, 2, 3, 4, 5. Extension in the 5th and a teeny tiny 1, 2, but I don't think it works here. I don't see a motive way down here. I don't, unless you went 1, 2, just a diagonal, but I don't think it is. It just looks like a zigzag all day. So therefore the idea of 5 ways breaks down. Once again we've got the issue of having transgressed into price one wave territory. Now you could argue that you haven't, because the wicks are so, it's wick to wick, so we can leave that one up for debate. However, the issue we have at that point is the same we had with the SPY, which is we are going to have to do something like this. And I would argue that that is not an impulse wave. Okay, I'd argue that it doesn't look right at all. Great, so we do have a couple of other considerations. We have the possibility of a diagonal, the whole thing being a diagonal. Alright, but it's not something I'm particularly keen on at the moment, because I prefer to look at this as a series of zigzags. Alright, so what we're going to do now is we're going to consider the possibility of the same double zigzag or triple zigzag idea for a bearish perspective. So we're going to need to change how we've counted that. Right. Just coming off of the high. We don't need this parallel channel as a base channel. Right, so we could be doing something like this. We count this as 1, 2, 3, 4, 5 into an A, into a B, and then a 1, 2, 3, 4, 5 into a C. So we get an A, B, C here for a W. 3 waves into an X, zigzag into a Y, 3 waves into an X, and now this is going to unfold again as a zigzag lower, and the whole thing's a double zigzag. Now it doesn't, because we can't get that 535, you know, because we just can't get down here in 5, and that's just the problem over and over again. That's the problem. I'll just go back and remind myself of the zigzag here. WXY complete. Sorry, I'm just trying to get my head straight. That's the bullish count. And what was I saying again here? Yeah, but we had an ABC, 5 waves down into a WX. Can we get that W? See, we can't get that 5, so we can't get this as 535 W. So we can get it as zigzag, flat, zigzag, zigzag, and then this is going to be a zigzag. Well, it's probably 1, 2, 1, 2. See how tricky this is at the moment? I think that's probably the best bet. So let's go 1, 2, 3, 4, 5 for A. There comes the B. There comes the C. Something like that. And this is a subwave within it. 1, 2, 3, 4, 5. Minuet degree. Okay, put those two away. And let's take that primary bearish count then. And get rid of this confusing segment. Delete this bit. And gives us our top. I might be able to come up with something else in the meantime, but I'm just going to say that a triple zigzag breaking down lower. Through the 50, maybe to the 61.8. I don't think we need that base trend now. Oh, we don't need that larger ABC. Let's delete that. Maybe something like that. Seems very violent and very quick for such a larger wave degree correction. See what it morphs into, but for the meantime, getting down as an impulse is very difficult. Therefore, a simple zigzag or a 1, 2, 3, 4 isn't working out as I would like it to at the moment. So they're the bearish counts. So let's have a look at a more bullish one. Okay, so this gives us the same invalidation point. Can we come off of here in a 1-2 though? That's the question. Bear with me a moment, I'm just going over some previous ideas. I think that is going to be the best fit. Right. So let's take all of this, put it into this folder here. Right. So this is ugly as well, guys, and there's just no denying it. This way we can say WXY complete. 3 wave move, 3 wave move, 3 wave move. In order to get down here, we've got 1, 2, 3, 4, 5 in the A, 1, 2, 3, 4 truncated fifth in the C of the Y to complete the 4, and then we get an impulse. Okay, 1, 2, 3, 4, 5 into 1. That means this 2 has to be now. I mean, like literally now. It can't be today, obviously, because we're not trading, but we have to bounce tomorrow, or this is immediately invalidated. Okay, and this becomes 1, 2, 1, 2 down. That's the best I can do for the bullish case. Right, that we've already bottomed, and we've got an insanely deep 2. I can't see any other way of interpreting it at the moment. It might be my limitations as a Elliottian here. I'm just struggling a bit. I think I'm all right at the game, but I genuinely have been finding this hard work. Breaking trend, continuing lower. So with a triple zigzag. I wish I could just go 1, 2, 3, 4, but I can't, because I can't subdivide this cleanly. So that's just tough. I could force it. You know, like I said, tiny little 1, 2, 3, 4, 5, or maybe I could go 1, 2, imaginary 3, 4 in here, 5, but I know I'm forcing it. At that point, it's not on the chart. That's 3 to the next. I mean, 1, 2, 1, 2, 3, 4, 5, 3, 4, 5, A, B, C, lower. That would be my bearish interpretation. And my bullish interpretation would have to be that we've already bottomed. 3 into 4. With a truncation, 1 into 2, very, very deep, close to invalidating already. And that's the best I've got for you for the indices at the moment. We will let the count decide where it's going, you know, and get back to you hopefully next week. In the meantime, let's have a quick look at the VIX. Right, VIX continues to elevate. As I pointed out for months now, you've got this rising trend of higher lows. Okay. And we've now got higher highs and higher lows over a shorter period as well. We're breaking some of these previous levels. We haven't exploded yet, but we could, if we have that final breakdown in a double zigzag or an acceleration in a motive wave down on the indices, then we could easily break all this and go flying higher. But for the moment, we're just creeping up. We could keep doing something like that for a while. Elevated, but not anything like this or this yet. Not even like these areas here. So no sign of an obvious explosion, but we have got a rising trend, and that is suggesting a rising trend within a rising trend, that we've got volatility picking up gradually. PCCs we look at whenever we look at the markets, as I've been saying ever since we made lows back at the end of 2020. 2021 we've started moving higher. I pointed out the crossover of the 60 over the 250. Tested it, fell back, through it, back tested it, and now we're moving higher. So we're heading towards extreme fear and panic. We're currently neutral territory here at the moment. But yeah, we're going to get up here. How long it takes, we are, I think, part of a larger bearish move now. But as you can see, these moves take time. You know, they don't happen overnight. And because of that, you've easily got room for this to come back, put in another wave higher in the stock market, come up, come back, put in another wave higher, until finally we have an extreme reaction. So that's the best I've got for you at the moment, and I'm going to leave you by saying my guts are telling me, and maybe I'm just being a little emotional, my guts are telling me we've finished something important up here. We've broken a long trend which started back in March 2020. We're breaking down, and I suspect we're going to head lower. Okay, we've got invalidation points in place in case we come higher, but my classical analysis opinion at the moment is that we're going to head lower. The Elliott wave count is tricky, I won't deny it, but that's what my instincts are telling me, especially with that crossover on the MACD on the monthly time frame. I mean, it's pretty ominous. You know, we've seen the same with Bitcoin as well, crossover on the MACD on the monthly time frame. The difference is obviously Bitcoin's been correcting for significantly longer, you know, and is already down a significant amount, 60% also. So nothing like that here in the stock market yet. So this could just be the beginning of something. If we look at the Nasdaq, see what we can see here. We can see that we've had the same crossover here on the MACD as well. We've broken trend, coming down from overbought conditions. We do feel, it just feels like we're in part of a larger correction that is still playing out, and it's probably going to be taking a fair old while to play out. Now, this could all be wrong. That's why I presented bullish counts as well as bearish counts. And if we reverse and come out of here violently and get on our way to new highs and break this level here, then we can look at the bullish count we presented and say, well, it's the best we've got. Alright guys, thank you very much for joining me on this technical analysis of the stock market. If you're new to the channel, you've liked what you've seen, please subscribe, smash the like, hit the little bell notification icon to remain informed of future video releases. As always, huge thank you to my Patreon subscribers. Sorry about not being able to perform a live stream last week. I'll make it up to you this week. If you're interested in joining the Patreon, there's a link in the description below. Go over, have a read of the tiers, see if there's anything you're interested in. I would advise, now that we're through the 20th of the month, to probably leave it to the start of next month so you get a full month's value from your subscription. And if you're not following me yet on Twitter, there's a link to my Twitter feed in the link in the description box below as well. Alright guys, take care of yourselves, and I'll be back with you later in the week. All the best. Bye bye.